Right, good people, please welcome for our session for MAC2601. Right, my name is David Ndlovu. Right, I'm going to be taking you for this module. So this is my name, David Ndlovu. Right, for those that are new to me, this is my phone number. This is my email address. I will have to correct in the last part there. Right, I'm going to send you a copy of this session so you'll be able to actually get my phone number there and my email. I'll email this for you. Right, today we just want to do an introduction to the subject matter of management accounting. Right, so we just want to do an introduction. Right, so we are doing what we call, just hold on. Right, we are doing what we call classification of costs. Then I think this one, which is the cost profit volume analysis, the calculations will start in the following week. Okay. Right. Just as a discussion point. Right. Remember, we are talking about MAC2601, which is basically your cost accounting. Right. We are dealing with cost accounting. Right, so this module, good people, is one of the most challenging modules when it comes to the accounting degree or similar degree. Some people may be doing management accounting as a degree course. Right, so whenever people do management accounting, this is one of those modules that present a bit of a challenge when it comes to people achieving their goals. Right, however, I would like to advise that it's not really a bad module as per se. Right, it's just that the module comes with new principles of accounting that have not yet probably been studied by the learners before. Right, so far you will see that most people, unless if you did MAC 1501, which most people in this module don't do, right, you would have done the FACs and other things, but not costing as per se. You would have done financial accounting, not the costing module. So this here is just a different discipline found within accounting itself. But because it's new, just like anything else that is new, right, it needs to be pushed a little bit more. So it needs a bit more of reading, a bit more of practice. But once you get it, then it is a nice module and you can easily pass your module, no problem. So I would say for you to pass this module, right, the most important thing is to practice questions. Right, because this is a new discipline altogether from your usual accounting, right? It will all come together with a little bit of practice. So we need to practice as many questions as we can, right? Here in class as well as on your own as well. Right, then the other thing with management accounting, right, theory is very important here. Right, theory is very, very important. So again, besides the calculations and what have you, right, you need to be very thorough with your understanding of theory, because whatever you do in terms of calculation, it will be informed by the theory understanding that you have. Right, I want to ask something here. I see that the FAC modules at second level, they are now on continuous assessment. For this module, what's happening? Are you still going to write exams or it's continuous assessment? If someone knows.
It's continuous.
This time it's going to be continuous assessment.
Yes.
All right, so we'll probably have to be very clever in how we approach the module. It's not business as usual anymore. So I don't have the exact information that maybe you have from your side. So maybe on Monday, when I get time, I'll communicate with you and then I'll tell you the information that I want. So what we need to do now is, if it's continuous assessment, what we need to do, we need to check what is on the first assessment. Then what we do now is, when we are busy with the module, until we do assessment number 1, we concentrate only on the topics that are under assessment 1, then we finish it. Once we are done with assessment number 1, then we go now to the topics that are on assessment number 2, right, until we finish all the assessments. So everything has got to be guided by the content of what they are going to ask in assessment number 1, assessment 2, 3, and 4. So usually UNISA will then give you a list of topics to cover for each assessment. So that is the information that I will be meeting. But the introduction to the module that we are going to do today, right, I reckon it will just be the same either way. It won't be affected by that. Right, so that's my advice for you good people, is just practice and your theory. Make sure you're thorough there. You'll be able to enjoy the module. Right, so I want to look at okay. Right, I was here. Right, I want you to have a look at this. Right, remember there is what we call financial accounting. Right, then there is management accounting. Right, so as you can see, both are accounting disciplines. One is called financial accounting, one is called management accounting. Right, so we need to be able to differentiate between these. Right, where financial accounting is concerned, right, they were saying this is geared, this is geared towards providing, right, information, right, for external and internal users. Right, this is geared towards providing information for external and internal, right, users. Right, and then the management accounting, this is geared, right, for providing information, right, this is geared for providing information, right, for internal purposes. Right, so whenever we do management accounting reports, right, they are not meant for consumption by all the stakeholders inside and outside the organization. Right, remember, when we talk about users of financial statements, right, when we talk about internal and external users here, right, we have the following examples. Right, we have internal users. These are parties that are interested in the financial statements and they are within the organization. Right, number 1, right, we have got management. Right, obviously the management of the company will be interested in the financial statements. They need to know how the company is doing, right, whether they should continue in the same direction, whether they should come up with new policies to adjust performance, etc. Right, we've got employees, right, for wage negotiations. Right, then we have got external users. Right, these are those entities or those people that are interested in the financial statements of the entity, but they are not within the organization itself. Right, so here you have government. Right, you have SARS. Right, the government obviously for statistics. SARS for taxes. Right, you have such entities as financiers, right, such as banks. When you go to the bank to ask for funds to fund your business, they want to see if you are making profits or not. Right, let's just say etc. So all these entities are interested in the financial statements of the entity, and we are saying the financial accounting function takes care of them. But when it comes to management accounting, we are saying these reports that are generated, right? The reports are generated, right, to help management make decision. Right, to help management make informed decisions. So these are reports generated specifically for management, right? E.g., production reports. You don't give that to people. Right, this is for internal purposes. Right, sales reports. Right, etc. So these are the kind of documents that will be generated by management accounting. Everything being done for internal purposes to help management have more information when they make decisions on behalf of the company. Right, when it comes to financial accounting, right, we use accounting standards. Right, we use accounting standards. So we use international accounting standards. We use IFRS, financial reporting standards. We use such things as GAAP. Right, this is because financial accounting reports should be standardized, should be the same. Right, should be standardized. Right, my spelling there, but standardized or the same from one company to the next. Right, this is very simple. Remember, these reports are meant for different stakeholders, both internally and externally. So we are saying if the reports are standardized, it is easy for different users to understand the reports. So therefore, the format of the report, what you include in the report, right, should actually be included or should be standard from one company to the next. So this here is not standard. So when it comes to management reports, right, this is designed as per management request. This is designed for management requests. Right, this here is used to calculate profitability. This is used to calculate profitability. Right, and basically is based on historical information. Right, this is used to calculate profitability and is based on historical information. So what it means is the reports will be drawn up on events that have already occurred. The report is based on always on events that have taken place. So if I'm going to calculate profit, I'm going to do it, let's say, at the end of the year, taking into account all the income and expenses throughout the year. So this is a historical report. But when it comes to management accounting, this is used for future purposes. Right, to help decision making. So here now you do budgets. Right, and forecasts. Right, so budgets and forecast are part of what is done in terms of management accounting. Right, so these are the main differences between the two disciplines. But here and there, one or two things will be the same. Right, so what you do, if you go to your study guide, I hope they give you the same study guide that you were having last time when they were doing exams. The first 2, 3, 4 pages, they just explain the differences between the financial accounting and management accounting. Right, you can augment the information that I've given you with that. Right, I want to concentrate on costing. Right, our MAC now 2601. I've just highlighted 1 or 2 differences between the two disciplines. Right, if you want to understand your management accounting, you have to have a good start with this module. And when we're saying you must have a good start with this module, right, you need to make sure that your theory is thorough and you understand it. Right, because when you go then through the module, everything that you do will then be referencing to this theory. So it is important that you are thorough always with your theory. That's the starting point. So the starting point when it comes now to management accounting is what we call the classification of costs. Right, classification of costs. Right, when we talk about classification of cost, we are basically discussing, right, how costs are grouped together. Right, how costs are grouped together. Right, to provide useful and relevant information. Right, so there are 3 main classifications that we have of costs. Right, the classification number 1, we have what we call direct, right, or indirect costs. Right, very important to understand what these terms mean. Right, we have what we call a direct cost, we have what we call an indirect cost. So I'll start with a direct cost here. Right, so when we speak about the direct cost, there are many ways of describing it. Right, all trying to explain the same thing. Right, so I'll start with the first way that we can describe a direct cost. Right, when we describe a direct cost, we are saying a direct cost is directly, right, attributable, right, to a particular product. Right, is directly attributable to a particular product, right, or a service. Right, what this means is that, right, without that product, right, or service, right, the cost will not be incurred in the entity. Right, the cost would not have been incurred in the entity. Right, so the cost is directly a result of a particular product. So therefore, it is associated with that product. Right, I will explain it in another way. We are saying the cost is easily identifiable. The cost is easily identifiable, right, on the final product. Right, the cost is easily identifiable on the final product. Right, so when we use that term now, when we say it is easily identifiable on the final product, we are saying we can calculate accurately the costs in each unit produced. So when we've got a unit that has been produced, this particular cost that we're dealing with, we can accurately just easily calculate the cost per unit in that particular product for a particular cost. Right, if we can easily accurately calculate the cost per unit, then it means the cost is a direct cost as per se. Right, let's explain this in detail. Right, we are saying the cost is directly attributable to a particular product. Right, let's give examples so that it makes sense. Right, let's look number one at what is called direct material. Right, when it comes to material, we are saying when you produce a product, when it comes to the material that you use on that product, right, when you buy the material, you buy it for a specific what? Product. Right, if I want to make chairs today, right, I will sit down first and say, what material do I need? I will determine the type of wood that I need. I will determine the paint. I will determine the screws that I need. Right? All these things, they determine, these things are called material. These are all raw materials. Then I combine them and then I produce my chairs. But the process of producing the chair, right, will start with the design of the chair. The design of the chair will then tell me what type of wood I need and what quantity I need, what type of paint I need and what quantity of paint I need, and what screws I need. So that therefore, when I'm going to produce the chairs, I'll go and buy this specific material for the sole purpose of producing the chairs. Right? It doesn't make sense for you to just go and buy wood. And once you have it, you then say, what do I need to manufacture, or what can I manufacture with wood? Right? It doesn't work like that. Right? Whenever we do production, we first sit down and say, what does the customer want? They want chairs. Right? Then we design the chairs, then we determine the material. Or the customer comes to you and say, I want chairs which are like this and that and that. So when you have those specifications, now when you buy material, you buy material that is specific to the chairs. Right, so for most intents and purposes, we are saying that material is a direct cost, because when we buy it for a specific product. Right, you see, all right, let's give another example. We then have direct labor. When you talk about direct labor, this is the labor of employees who do the actual manufacturing. So these are the guys that handle the machines. Right, these are the guys that do what? Your machining. They are directly involved in production. So now we don't include management, like your factory supervisor is not a direct employee. We don't include your production manager, he is not a direct employee. We don't include cleaners in production. They are not direct employees because they don't actually do manufacturing. Right, with employees who do the actual manufacturing, if we have decided that we are going to produce chairs, right, we know that we are going to need a carpenter. We're going to need a spray painter. Whenever we procure this labor, it will be guided by our budget today for the chairs. So maybe we might know that we need 2 carpenters and 1 spray painter. Then we go and hire these people with the specific job of manufacturing the chairs. So therefore, they are what? They are specific employees. And therefore, whatever cost that we incur over them, these are specific costs. Right, are we following, good people? Are we on the
Yes,
same page?
yes,
Yes.
yes.
Thank you. So these are the direct labor. Then we have what we call direct overheads. Right, the term overhead here, we are simply saying any costs, right, that is not, any cost that is not direct is called an overhead. So any cost that is not direct material and direct labor is an overhead. Right, some of these overhead costs are direct, some are indirect. So examples of direct overheads, right? Anything can be a direct overhead, and the very same term can also be an indirect overhead. It all depends on the circumstances. So for example, I'll give you a direct electricity. I'll give you also the direct rent. Then I will explain this. Right, you see, this is what is happening. Right, when I have got one product that I'm manufacturing, I'm busy with my chairs. This is the only product that we manufacture. We manufacture school furniture chairs, right? And then we're saying we don't manufacture anything else except just that. So what therefore happens is that when I incur rent, when I incur electricity, right, these two costs are directly attributable to the chairs. They have been incurred for the chairs. Without the production of the chairs, I will not incur these particular costs. So for the very same fact that these costs have been incurred specifically for the chairs, they will be classified as direct. But picture another scenario when we produce 3 products, but we then incur rent and electricity. Now it's a different story. The rent is attributable to 3 products. So does the what? The electricity. So the rent is not a specific cost to a particular product, but it is a cost that is shared among 3 products. So when a cost is shared among a number of products, it ceases to be a direct cost, because a direct cost is specifically incurred directly for a particular product. Then we are going to call it a direct cost. So in this instance now, the rent expense, which in this circumstance, right, that I have there, is a direct cost because it is attributable to one single product. When it becomes a shared cost among 3 products, it becomes an indirect cost. So does the electricity. As long as it is electricity over a single facility, a facility that produces one product, then we are going to classify it as a direct. But if the cost is shared among products, then it becomes an indirect cost. Right, so this is what we have explained here, that when it comes to a direct cost, it is attributable to a particular product or a particular service. Right, so that is the defining factor when you look at direct cost. Is this cost, all of it, attributable to a particular product? If the answer is yes, then it is a direct cost. But if the answer is no, then the cost is shared among a number of products. It means this is a rent expense, but in this particular workshop where we rent, we manufacture 3 different products. So the cost is not direct to a particular product, but it is a shared cost. Now, when a cost is direct and is attributable to a single product, then it is easy and accurate to calculate the cost per unit or the cost in each product. So how do we calculate cost per unit? Right, it's very simple. You simply take your total cost, right, and then you divide it by the number of units produced. Right, take your total cost, divide by the number of units produced. So for example, if I bought direct material, right, I bought my wood to manufacture my chairs. All in all, I can see that I spent 100,000, right, in terms of wood to manufacture the chairs. Then in total, I produced, let's say, 10 or 20,000 chairs. Right, let's say I produced 20,000 chairs. Right, so when I want to know and say how much direct material went into the production of chairs, so I want direct material, right, this time per chair. That's very simple. How much in total did I pay? How many chairs of the same type did I produce in total? I produced 20,000. So therefore, we are saying that it actually cost me 5 rand. Is it 5 rand? Divided by 20,000. Yeah, it cost me 5 rand of material per chair. Right, remember the chairs are exactly the same type and design. So therefore, they consume exactly the same quantity of material per each unit. So no one can dispute this calculation. Right, this is what? Accurate. So this is one calculation, characteristics of a direct cost. First, we know that a direct cost is attributable to a particular product. Right, once we know that, then we are saying it is easy to accurately calculate how much of this particular cost went into the product. So if you have got these two in place, which if you have that, you obviously, if you have directly attributable to, then you also have B there. It means you are dealing with a direct costs. Are we clear, good people?
Yes.
Sorry, okay. If we bring electricity, what's going to happen? Electricity as one of the costs that are directly linked to this one. Are we going to add the cost of electricity on that direct material?
Yes, remember at the end of the day, you will probably want to know to say in total, how much did it cost me to produce the chair? To answer that, you will say how much direct material per each chair, which is what we just calculated now. Next, you will say how much direct material per what?
Electricity, yeah.
You add that. So you put all your costs together, including the indirect ones. Then you determine your total costs. Right? But when we look in isolation at a particular cost, we are saying if we can accurately calculate its value per each unit produced, then it is a direct cost. But if we cannot calculate its value, then we can calculate always value because we can always estimate. If it's accurate, it's direct. If it is not accurate, it's what? Indirect. Right, so let's go to the indirect. When we put the two together, it should make even more sense. So we go to the indirect costs. So the characteristics of indirect costs, it's opposite of the direct cost. We are saying, the cost is not direct to a particular product. Right, the cost is not direct to a particular product. Right, so if it is not direct, it means this is a shared cost. It's a shared cost, right, attributable to a number of products. So what it means, cost per unit cannot be accurate. Right, cost per unit, right, is not accurate, but estimated. So that's the main difference. Right, let's give examples. Right, number one, we have indirect material. Right, by default, material is usually what? Direct. Right, in only one rare instance can material be indirect material. Right, this is because when you are in production, the issue of material, you don't guess material. There is a design which tells you which material to buy and which type and which quantity. So when you buy material, material by default is a direct cost. Right, however, if material, right, if the cost of material, right, if the cost of material, right, is insignificant, right, if the cost of material is insignificant compared with the final value or the final cost of the total product, then the cost is indirect. Right, so I'll explain that in passing here. Right, so you see, I'll continue with my example of the chair. Right, we have said there are different materials here. There is the wood, and we've said there is the paint, and then we've said there is the screws. Right, obviously the wood forms a big portion of the cost of the what? Material. And this is the main material that is going to be used. So obviously by nature, it will be more expensive in terms of the raw material here, direct material. The paint may also be slightly significant. Paint has always been expensive. Then the screws, you might find that this chair maybe just requires 10 screws. So when we picture screws, screws are very small. Right, you might find that maybe the wood, remember we said it's 5 rand for the wood. Let's say the wood costs 5 rand. You might find that the paint costs 1 rand. So I'm just giving you a rough estimate. But you might find that the total value of the screws that were used. So here I'll put wood. I'll put paint. Right, this is per chair. Right, it's just a rough estimate. Obviously, no chair is going to cost 5 rand. Right, then the screws. Right, maybe I put 10. You find that the cost is 0.0001. That's per each chair. Right, so this is because when you buy screws, perhaps you bought 1,000 screws, 1,000 rand worth of screws, but they were 100,000 screws because these are small things. So that box that cost you 1,000 contained 100,000 screws, which means each screw is costing 0.01. Right, let's say there were 1,000,000 screws there, which means that each screw is actually costing you 0.01. So if you are using 10 screws per each desk, for each chair, this is going to cost you 0.01. So we are saying that this cost here of the screws, right, compared with the other material that has been used, is almost insignificant. For example, if we are rounding off the cost of the screws to 0 decimal places, right, the cost of the chair now, sorry, the cost of the chair, let's round off everything to 0 decimal places, right? You will find that when we round off, we're going to get 6 rand. So this being our what? Our cost of the material in total used on the chain. Now we have a problem with that, because as a company, we did purchase the screws. And we are saying if we are going to recover the cost of production of the chairs and make a profit, right, we need to make sure that all the costs are included here. But because we round it off, this cost has been left out. It's not allowed. So what companies will then do normally will then say, right, this small figure, if we include it as it is, it doesn't make sense. Imagine if you are producing something that is worth 200,000, but there is a cost of a material in that particular product that cost you, or in all other material 200,000, it is costing 5 rand or 0.105. Doesn't make sense. So what we normally do will then say, let's add the screws at 1 rand so that we've got 7 rand. Now it might not be accurate, but we avoid not including the cost of the screws. Otherwise, overall, we might end up costing the product at what, or determining a selling price that does not cover all the costs. Right? You understand it?
Yes.
Right. So we are saying the cost is too low. So what normally happens is that we have to estimate a reasonable what figure. So therefore, we estimate, right, a reasonable figure. Right, to add to the other cost. Right, in management accounting, as soon as you use this word, estimate, as soon as you've got the word estimate, then it means whatever you are doing is no longer accurate. It is no longer 100%. And as soon as you use estimate here, then the cost is an indirect cost. So this is the only time that material will be said to be indirect material. All other circumstances, material will always be what? A direct cost, except only in this instance. Right, are we on the same page?
The last, what is it? Estimate is equals to, I think it should be indirect. Yeah, that
Right,
one.
that should be indirect. Thank you very much. It shows that we are together. Thank you very much. Right, so that's an indirect what? Material. Then we also have indirect labor. Right, these are factory workers. They are in manufacturing. They work in the production space, but do not do the actual manufacturing. Right, they are there in production, but not directly involved in production. Right, so we can have examples here. Right, number one, supervisor. The supervisor will not be the one that handles the machine. He might probably be moving between different products. If you manufacture 3 products, maybe he's supervising the whole workshop. Where you manufacture your chairs, you manufacture your desk, you manufacture other things. He's the overall supervisor, overall overseer of the what? Workshop. Right, in production there, you have got to have cleaners. Those guys that will run around and pick up every litter from the floor, sweep up the place and make sure that the place is clean. Right, we also have maybe maintenance workers. These guys don't do the actual production, but they are essential on the production floor to make sure the machines are working properly, the lights are on. If you need to coordinate or control the temperature, right, all of that is being properly what? Controlled, but they don't do the actual production. Right, at the same time, we then have indirect overheads. Right, so these are simple shared overheads. These are simple shared overheads. Right, I will give the same examples that I gave. It could be rent. It could be electricity. But the difference now is that this service more than what? One product. Right, it's very simple. When I have got one product and I incur 100,000 in electricity, this year, this total cost here, I put dollars there. Yeah, I don't have that much money. Right. So this 100,000 here, this is a direct to this one product. It's a direct cost. Right. If I incur a cost of 100,000 and perhaps I produced 20,000 chairs, my electricity cost per each chair, 500. Accurate cost, no argument. Right. That's a direct cost. So therefore, this will be a direct situation. Right. But let's say I produce a product A, B, and C. Then I've incurred a cost of 100,000. Now, this here is a shared cost between the three. I need to find a way of splitting this cost between the different products. Right, perhaps my way of allocating this will allocate 50,000 here, right, 30,000 there, right, and 20,000 here. But the question is, how do I get to split this cost between the three? You have to use estimation. You can never be 100%. So the allocation will be based on estimation. You have to use some estimation to determine this. Right, so what you do, if it's electricity, you might come and say how many products were produced by each. Right, how many products were produced by for each type of product there? Because you'll be saying the number of products determine how much the machines are going to, how long the machines are going to run. And then they will therefore determine the electricity consumption. Then you use that to allocate the cost. But then someone might say, are the products exactly the same? Do they take the same amount of time to produce? If the answer is no, it means this is just an estimate. It's not accurate. You just have to have something to use to share the cost. But whatever method that you use to share the cost, usually it will just simply be estimation. As long as you've got estimation in the equation, then you are dealing with an indirect cost. Right, are we clear, good people? Right, so
Yes.
given a long list of items, a long list of costs, you should be able to separate and say these are direct cost, these are indirect cost. When it's material, it's always direct cost unless if the cost is too small. When it's labor, you've got to look who was providing the labor. Was it the supervisor, the cleaner, the manager? Indirect costs. If it was those people that handle the machines, like the machinists, carpenters, welders, etc., direct costs. When it is an overhead, it can either be direct or indirect. Now the question is, are you manufacturing one product or not? If you're manufacturing one product and the cost is incurred for that particular one product, that's a direct cost. But if you've got a number of products and the cost that you incurred is a shared cost, it's an indirect cost. So if I give you a long list of costs and I explain the nitty-gritties there, you should be able to split them very easy between the direct and the indirect cost. Right, are we clear? Right, let's go to classification number 2. So you will see that as you do your management accounting, if you just go to the static height, if it hasn't changed, I will still rely on you to provide me with the static height as well. I've got the last year's one. If you go to the contents page, you check there, you will see where they talk about a direct costing statement. an indirect costing statement. So while we are busy discussing theory here, and we are going to leave it today at theory, when you go to the next chapters, you need to create a statement that is made of direct cost only. At some other point, the question might ask you to create statements that are based on what? Indirect costing. That is why we are saying, when you understand your theory, the numbers will make sense. But if you don't understand theory, the numbers will not be numbering. So take your theory very, very serious. You will enjoy the chapter that's what follow. Right, classification. Right. Right. So what's the next one that we did? We direct and indirect costs. So we then also need classification, right, by cost behavior. Right, let me start with classification by nature. There are 3 classifications. I've already given one. There are 2 more to go. Let me start by classification by nature, right, of costs. Right, so when you classify costs by their nature, right, the question that you'll be asking is, where is the cost incurred? Right, where is the cost incurred in the entity? Right, in the entity or organization. Right, so we see that normally for management accounting, right, normally, right, for costing, right, an organization is structured in this way. Right, so when you look at an organization, you will find that an organization will be structured in this way. So we can say organizational structure here. By the way, we are assuming that we are dealing with a manufacturing concern in most of our dealings here in management accounting. Right, so number 1, we then have what we call a manufacturing division. Right, the organization will be structured in the form of divisions, with the first division usually called the manufacturing division. Right, number 2, right, we may then have what we call the sales and admin division. Right, usually we then have number 3, the admin, let's just say sales on its own. So normally sales and then the admin on its own. Right, so when you look at the organizational structure, we are saying the simplest and most common organizational structure, right, will then have these divisions. So we separate our organization into 3 parts: the manufacturing part, the sales part, and the management part, which is the admin. Right, in this division here, right, this is where production or manufacturing takes place. So this is the activity that we get here. So because this is a manufacturing division, right, costs incurred here, right, will be called manufacturing costs. Right, costs that we incurred here, we are going to call them manufacturing costs. Right, this division here is called the sales division. it gives sales costs. This division here is the administration cost. It's the administration division. So all the cost incurred here, we will call them admin costs. So it means that in broad terms, classification by nature looks at where exactly in the organizational structure is the cost incurred. Right, if we check the organizational structure and we say that a cost is incurred in the manufacturing division, right, that particular cost is going to be called a manufacturing cost. Right, and so all the cost incurred there will be manufacturing cost. We check, we say we have the sales division. All the cost incurred there will then be sales costs. Same with this admin division. All the cost incurred will then be admin division. So in broad terms, we now have manufacturing cost, sales cost, and administration cost. Right, these costs, when we combine them, right, where we, right, these costs, when we add them together, we call them periodic costs. So these are what we call the periodic costs. Right, so it is important to remember that term. You can get a multiple choice question that says sales plus admin costs equals 2. Then they give you different terms. You must know that we call that a periodic cost. Then when we go now to this year, what are the examples of costs that we get here? Right, number one, we are into manufacturing. We are into manufacturing. We have to have material that we are using to manufacture. So therefore, we have direct material. So direct material by nature is part, any material anyway, it is part of what? Of the manufacturing costs. Secondly, those people that work in the factory and do the actual manufacturing, we call them direct labor. There will always be direct labor in the factory unless if you're 100% automated, which is usually impossible. There is usually human intervention somehow in production. So therefore, those people that actually do actual manufacturing, they are called direct labor. Then here, we then have manufacturing overheads. Remember, overheads is a blanket term, which means any cost that is not direct material, any cost that is not direct labor, it's an overhead. But here we're specifically, because we're in the manufacturing division, we are saying manufacturing overheads. Now, manufacturing overheads is any cost direct or indirect incurred in the factory. So therefore, it might encompass indirect material, as long as it is a material incurred in the factory and it's indirect to be manufacturing what? Overhead. Then we've got indirect labor. Right, we can have electricity. We can have water. Right, any other cost incurred in the factory that is not direct material and direct labor. Right, we are going to call it a manufacturing overhead. Then there is a term that is very important to remember. When you mix direct material and direct labor, we call this a prime cost. But when you mix now the direct labor and the overheads, right, we call this a conversion cost. This is the cost of converting the raw materials into finished products by combining, by using labor and overheads to convert the direct material into finished products. So all these terms are important, and we are saying these terms that we've highlighted here, they are associated with the manufacturing division. Right, so that's your manufacturing division. Manufacturing division gives you manufacturing cost. And these are examples of your manufacturing cost and the group subgroupings that we have. Prime cost, conversion cost, etc. Right, then we go to the sales. Right, we can only just give examples here. Right, in terms of sales, what does the sales people do? There is advertising and marketing cost. Right, the sales people are responsible for deliveries. So fuel for deliveries. Right, please mute, thank you. Right, there is the salaries of sales rep. Sales representatives. So all the costs incurred in an effort to sell the product of the company, they will fall under the sales costs. They will fall under the term sales costs. Right, administration. Right, under the administration, you find accounting costs. So the cost of accountants and other accounting staff costs. Right, this is part of that. You find HR costs. That's administration. You find maybe the managing director here. Right, etc. So all of that is part of what? Administration. So therefore, we then end up with the term classification by nature. And remember, just to summarize, when we talk about the nature, we are simply saying we get manufacturing costs. Right, we get admin costs. We then get sales costs. Right, remember, these are your periodic costs. Right, remember, this here gives you prime cost. You must know which cost to add together. It gives you conversion costs. So this here should be on your fingertips at all times. Right, any questions, good people, on the classification by nature? Are we on the same page?
Yes.
Right, then we move on to the final classification of costs. So this time we're looking at classification in terms of cost behavior. Right, so when you talk about cost behavior, in simple terms, this is what we are saying. How does the cost respond to changes in output? How does the total cost, right, change to changes in costs behavior? Sorry. To changes in what? Output. Right, so when we talk about output here, we are saying units produced. If we vary the number of units produced, what is going to happen to the total cost? So when we deal with this, we then identify, number one, what is called a fixed cost. Right, when it comes to a fixed cost, right, we are saying the total cost, right, the total cost does not respond to changes in output. Right, does not respond to changes in what? Output. Right, the total cost remains fixed. Right, as output changes. Right, the total cost remains fixed as output changes. So it doesn't matter what is happening to output, the cost remains the same. Right, so we can give an example so that we understand this. Right, of rent expense. Right, so here we are saying we produce 1 unit. Right, and total rent 100,000 for the year. Right, so therefore we are saying if I then say quantity here, then I say total rent, then I say costs per unit. Right, if I produce 0 units, remember I'm renting premises. In those premises, I'm charged a total of 100,000. If I produce 0 units, I will still pay the 100,000. There won't be a cost per unit because I did not produce anything. If I now produce 10 units, right, remember I'm being charged my rent based on the space that I occupy, not on the number of units produced. But my cost per unit this time, I'm going to say overall, I incurred cost of 100,000, but I only produced 10 units, which means per each unit produced, it cost me 10 Rand per year in terms of rental. I should be producing something of high value. Maybe I'm producing aeroplanes, I don't know, which per each unit can actually hang a cost of 10,000 per unit. Right, if I improve my production, this time I go to 1,000 units produced. The overall or the total cost, I'm being charged per space occupied, not according to the number of units produced. So I'm being charged per square meters that I occupy. Doesn't matter how many units I produce. So therefore, we are saying now per each unit 100,000 divided by the 100,000 units that I'm producing. The cost will now become what? 1 Rand. Right. So the principle is
the quantity is 1,000, and then to become 100. You repeated the total.
I see. Thank you very much. Right. Okay. Let's see.
It will be 100.
Sharp. So some things are popping up on my screen here. Right. Thank you. So therefore, we should be having 100,000 today.
And only 100, yeah.
100 Rand, not 100,000.
Yes, yes.
Right. So the main principle that we have explained, we are saying what happens to the total costs when output changes. What happens to the total cost when output changes? So here the output is moving. We initially were not producing anything. We had to rent the space and put up the infrastructure before starting production. So we're busy building our plant. We didn't produce in that year. Then we produced 10 units. Then we produced 100. But what is happening? This cost is not dependent on the number of units produced. In terms of its total, it remained the same. There is, however, a principle that we have also noted. As we produce more units, the cost per unit now gets to what? Decrease. So this is a silent feature of fixed cost. The cost per unit, right? The cost per unit reduces as output increase. So that's why it is usually profitable to produce more, because when you produce more, then the cost of production per each unit becomes smaller. That's why we have to hit volumes. If you are doing manufacturing and you are competing with your peers, right? If you are going to make a splash in your industry, then you need to be able to produce high volumes at the same total cost or fixed cost with your competitors. It simply means if you produce more and your cost structure is the same as your neighbors, you get to make more profit because now you share the fixed cost over more units than when you produce less. So that's a fixed cost. Now, the next cost that follow is what we call variable costs. Right, so we have something that we call a variable cost. Now, with a variable cost, we are saying the total cost changes in direct proportion to changes in output. So the total costs, right, changes, right, in direct proportion right, to changes in output. Right, simple put, this is what it means. As output increases, remember, output is the number of units produced. Right, as the output increases, the total cost increases. I don't know what's happening. This thing is a bit slow. Right, but it will come back to life just now. So as output increases, the total cost also what? Increase. And the vice versa is true. Right, as output decrease, right, the total cost will also what? Decrease. So we'll do an example of that. Right, as output decrease, right, total costs decrease. Right, let me just say and vice versa. Right, so let's give an example of that. Let's give an example. Right, let's give an example of direct material. Right, we are producing chair. We are saying one chair requires right 1 meter of wood, right, and 1 meter costs R1. So I'm just simplifying, cost R1 so that we have simple calculations. Then we can have our output. Then we can have cost per unit, which is cost per chair. Then we can have the total cost. Right, let's look at what is happening in this instance. Right, let's look at what is happening in this instance. You pay attention to the variable cost and the fixed cost. Our next lesson is going to be based on these principles. Right, let's say we produce 1, 2, 10, and 20. Right, so this is what is going to be happening. Right, remember, each chair requires 1 meter, and each meter requires what? R1. So therefore, to produce 1 chair, the cost is R1. Right, technology can be a problem. It's a bit slow. Right, so it costs R1. So which means, therefore, in total, if I produce 1 chair, I have to spend R1 on material. If I produce 2, remember it still cost me 1 rand, which means it will now cost me 2 rand. If I produce 10, I'll spend 1 rand per each share, but overall this time I'll produce 10. If I produce 20, I'll spend 1 rand. Overall, this time it will cost me what? 20. So we are saying for every level of increase in output, there's going to be a same increase in what? Output. So there is a proportional increase in terms of cost as quantity increase. If quantity decreases, there is a proportional decrease also in what? In the total costs. But there is a silent feature. The cost per unit remains constant. Right, the cost per unit remains the same. Right, so if you have got a cost that behaves like this, then it is a variable cost. Any question? Are we understanding that?
Yes, it is.
Right, then the final cost is a semi-variable cost. Right, a semi-variable cost is also called a mixed cost. Right, so we are simply saying the total cost is a combination. Right, total cost is a combination, right, of total variable plus total fixed cost in one. Right, e.g. a cell phone contract line. Right, when you go to MTN and you are given a contract line, or you buy you get a contract line, right, there is a portion of the cost that is always fixed, a small amount, maybe 100 rand. Whether you phone, whether you don't phone, it will be there. But when you start calling now, there are additional costs that you are going to incur. Now, those additional costs are variable because they depend on the number of minutes that you spend on the phone. So the more minutes on the phone, the higher the cost. The lower the minutes, the lower the cost. But when you get to total bill, it contains that variable element plus the fixed small amount, which is always there. So that's an example of a semi-variable or a mixed cost. So whenever we talk about cost behavior, we have to understand fixed costs, variable costs, and a mixed cost. So those three now give you what we say is cost behavior. Right, any questions, good people, on classification? Are we on the same page?
Yes.
Yes.
Right, when we meet next week, okay, so this is our next lesson. But remember, we'll discuss on Monday. I need to know what is on test number 1 or assignment number 1, whichever assessment you're going to have. So that if test number 1 is saying they are going to be discussing theory, we are going to concentrate more on theory until we finish with test number 1. Then if test number 1 is a bit on theory and a bit of calculations, we have to look at what theory and what calculations are needed. We sit on that until we finish test number 1. So that is how we are going to do our class. So I'll be coordinating with you to find out exactly what is on the text or what is on the assignment that is upcoming. Those will then determine the lesson. But in the absence of that, we are going to look at what is called cost profit volume analysis. So you can have a look at that cost profit volume analysis. That was supposed to be our next lesson. I think it's going to be the same because the theory is minimum. You can't have a test on or an assessment or an assignment only on theory. It will have calculations, and what will follow, you will do this. So please, serious management accounting students, they read ahead of the tutor so that when you come back next week, right, you already have an idea of what the topic is about. Then together now we finish the topic. Right, I am done for the week, unless if there is an addition from the floor, right, we'll call it quits for the day.
Sir, before you leave, the notes, You are going to save them somewhere digitally, or you will distribute them on WhatsApp?
The notes, I think I will email them. So
Okay.
I will request the emails, then I'll send them on emails. But I normally do it on Monday in the morning,
Okay.
unless if I've got free time, let's say Sunday, or maybe if I've got the energy later in the day, I can always send again.
Okay. And then during the week, we don't have classes.
During the week, no, midweek, we don't normally have classes. We'll see as we go along when the timetable cycles. If there's a free time there and you guys are saying you want additional time, we can always arrange and meet, But normally, for this module, we normally do 2 hours every week until we finish the assessment, and it has worked just fine before.
Okay, thank you.
All right, Siaboga, we shall see you when we see you. Thank you.
Thank you.
Thank you
Bye.
so much, David. Bye.
Sharp good people. Bye-bye.